Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/rive to receive the top 10 stocks to buy right now. Coinbase reported some better than expected results late in the week last week, and the stock was actually up 18% Friday. Seems like it was a pretty good quarter in the first quarter for Coinbase. Investors were a little bit more optimistic about the future than they had been. But I think it's worth pointing out exactly where there was strength and where there was weakness for Coinbase. Because at the end of the day, if the company isn't growing in the right areas, this isn't going to be a long-term sustainable bounce in the stock. So that's what I want to dig into today. My name is Travis William. Thanks for watching Rive Investing. Please subscribe here on YouTube for all my content. If you're interested in Coinbase, check out Asymmetric Investing. I have a link to that in the show notes. I'm covering stocks with 10x potential over the next decade. So I think you'd be interested in that. If you're interested in Coinbase, let's get to the results. And I want to start here with the high level results. This is the key financial metrics. So just revenue, net loss, and adjusted EBITDA. Adjusted EBITDA, they use as a proxy for cash flow for a lot of companies. So that's kind of the way to think about that. Revenue, $736 million, up from $605 a quarter ago, and the best quarter since Q2 2022. You can see still down significantly from a year ago, but things are getting better from a revenue side. At least that's the way it appears. I want to talk about exactly where that revenue is coming from in a second. Net loss, only $79 million. You can see that's actually the best net loss in the last year. That's really positive. That gets to a lot of the cost reductions that Coinbase has put in place recently. So there's a positive, and I'll cover some of those details. And adjusted EBITDA, $284 million. And then the other thing they do is compare this to their outlook. So this was given in February. You can see the conditions got significantly better. So revenue and expenses across the board were actually better than expected. That's partly due to higher trading volumes that happened later in the quarter, and partly due to the fact that cost reductions have been a little bit deeper than management had said they were. Here's where Coinbase's revenue comes from. And this is where I really think investors need to understand exactly what's going on here. Okay, so first thing, this has always been the biggest piece of their revenue is customer transaction volume. So this is you and me buying a little bit of cryptocurrency and holding it or putting it into a crypto wallet. That is down by almost 2/3 from a year ago, down even more than that since the peak. $352 million. Institutional revenue, $22.3 million. I think this is interesting because institutions have been one of the areas that Coinbase has really focused its growth, but not generating a lot of revenue there. So just keep that in mind. $375 million in revenue, up a little bit from a quarter ago, but down from a year ago sharply. So not looking great on the transaction side. Where there's a ton of growth is on the subscription and services side. There's a couple of things to keep in mind here. Blockchain rewards, so this is going to be things like staking. That's actually doing really well. And that's one of the areas you would hope to see a lot of growth for Coinbase. And that does seem to be the case. Custodial fees down. Again, crypto's down, so maybe not all that surprising. This is the big one. Interest income. Coinbase makes interest from two sources. The company has over $5 billion in cash on the balance sheet. So that cash generates interest because they invested in things like treasuries and savings accounts. So they're going to generate some interest from that. But the bigger source of revenue and the vast majority of this interest income that we see from the quarter is from the company's 50% stake in what's called the Center Consortium, which runs the USDC token. They own this Center Consortium 50-50 with Circle. That's usually the company that's associated with the USDC token. And then they split the revenue depending on how much assets are on each of their platforms. We don't know exactly the details on how that revenue is split out, but this is where we see it in Coinbase's financial statements, is in this interest income number jumping from $10.5 million a year ago to $240.8 million. The reason that's increasing so much is because interest rates are going up. When interest rates are almost 0%, then all the assets backing the USDC token which are put in very low risk investments like treasuries or even just in savings accounts, they're not generating a lot of income. Now that interest rates are over 5%, even in the short term, they're generating a lot more income, and that flows to Coinbase. That is a big reason that results were better than expected. The good news is that interest rates seem like they're going to stay high for quite a while. The bad news is USDC has actually had a fair amount of redemptions recently as investors, particularly in the US, are worried about cryptocurrency regulations and even for assets like USDC. So this number may be a little bit volatile in the future. It seems like it's still going to be very high. I have predicted somewhere around $800 million in interest income for the year. That depends on how many assets are in USDC and what percentage of that revenue comes to Coinbase. This is a big reason that results were better than expected, is this interest income number. Here's the other general trends. You can see that consumer trading volume is down. Institutional trading volume was down, although not nearly as much as consumers, but keep in mind that's far lower revenue for Coinbase. And the other interesting trend is Bitcoin is actually generating a larger percentage of trading volume. So that's really notable, I think. On the cost side, this is the other positive trend for Coinbase. Brian Armstrong, the founder and CEO, basically got out ahead of the cost cuts that have happened across Silicon Valley, across tech companies, and really cut pretty deeply at Coinbase. There was good reasons for that. The company's revenue was dropping as crypto dropped, but you can see the impact of that right here. Transaction volume is down significantly to 13% of net revenue. Sales and marketing, $200 million a year ago, $64 million last quarter. Technology and development, 571 a year ago, 358 in the most recent quarter. So a big drop there. Same with general administrative. Now, restructuring costs are up because they're paying severances and things like that for layoffs that happened in the first quarter. But even with that, those restructuring costs, operating expenses fell from $1.72 billion to under $900 million. So a nearly 50% drop, and it would have been an over 50% drop if it wasn't for those restructuring costs. That's just an incredible turnaround for Coinbase from a cost structure standpoint. And that's one of the big reasons that the stock was reacting really positively on Friday. There's still a lot of question marks for Coinbase long term. We don't know what the role of the cryptocurrency market is going to be in the US or around the world. We're seeing regulators really crack down specifically in the US, but then they're opening up in countries like the UK and in Hong Kong and other parts of the world. So it's kind of a mixed bag from a regulatory standpoint. But if Coinbase is going to be a great investment long term, one, it needs to build the tools that people are using in crypto and Web3. I think we're starting to see that with an increase in subscription revenue, not just the interest piece, but the other pieces like blockchain rewards and other things that people are actually paying for on a month-to-month basis. So that's a general positive trend, although it isn't big enough to support the company right now. But that's ultimately where the long-term growth is going to come from. And to get there, Coinbase has got to cut costs and generate revenue somehow. And that's where we saw some positive news. Costs are coming down really dramatically. That's going to help the company get through this crypto winter. And it has the great benefit of hundreds of millions of dollars in revenue coming from interest income. That's a benefit that not a lot of companies have. So that will allow Coinbase to get through this current phase. Now, if you don't think that crypto or Web3 or any of these blockchain technologies that are being developed are going to be a big part of the future, then this isn't an investment for you. And that's okay. But if you think the blockchain is going to be a piece of our future, like I do, I think Coinbase is going to play a big role. And that's why I think the potential reward outweighs the potential risk with Coinbase. That's why I stay invested in this stock. I think this was a pretty solid quarter. I didn't walk through the company's cash changes, but cash was only down from 5.5 billion to 5.3 billion. That's even after making an acquisition and doing some other non-operating uses with cash. So I think the company's in a really solid financial position. Now it's got to build that technology and that business for the future, but that's where the upside lies. It will take a while to get there, but this is one solid step on the path. What did you think of the results? Leave your comments in the comment section below. Don't forget to subscribe to Rev Investing. Thanks for watching, everybody. See you here next time.